The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 12th Marvelous Monday edition of today's opening bell on the Trader's Edge. It's not the Trader's Edge, it's the Money Masters show. I was multitasking again. Well, look, one thing that hasn't changed. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that is something you and we must master each and every day. So let's begin our day with empowering beliefs. My favorite. Because if you get your head wrapped around this, well, then you've got it made. And they're called Become Your Own Electrician, the electrician of your beliefs. The reason is because beliefs have the power to create and the power to destroy. You and we are the ones with the most extraordinary, awesome, incredible ability to take any experience of our lives and create one that empowers us, takes us to places we never even dreamed about, or we can be negative. We can use it to disempower us, and I want you to think about it really like this. And this is the key. There's only one thing you and I can control in life. That's the meaning that we give to something. That is the beauty of the markets we trade. We've got bulls. We've got bears. One that sees an event as a selling opportunity, one as a buying opportunity. Your beliefs, the meaning that you give to events, to chart patterns, to statements, to criticisms, whatever it might be, you are the one in control of that meaning. And it's pretty cool when you really think about it, because what we can or cannot do, it is rarely a function of our true capability. It is more likely a function of our beliefs about who we are. And that matters because all personal breakthroughs, they begin with a change in beliefs. All personal breakthroughs inside the market, they require a change in trends. So how do we change? Well, the most effective way to change is to link our brain, associate massive pain to an old disempowering belief. We've got to believe at our deepest level, at our core, that belief has cost us in our past, that it's going to continue to cost us in our future because it's costing us pain right here, right now. So knowing what we don't want, and that's the pain, is just as important as knowing what we do want. Why? Because we want to replace that pain with something that's pleasurable. We want to associate tremendous pleasure with adopting a new idea, an empowering belief. When you do that, folks, you can overcome any hurdle that you faced in life. And all you need to know is that at any moment, that any change that we make can and will change the course of our life forever. It could be the next person we stand behind in line, sit next to on a plane, a subway, a boat, a bus, anywhere. Could be the next phone call you make. How about the next phone call that you take? The next book you read, the next newsletter that you subscribe to. Any one of those things could be the single thing that causes the floodgates to open. And then all of the things that you've been waiting for will fall into place. Yes, folks, it is Marvelous Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off. Of course, they were kicked off about a half an hour ago. Right now, the Dow is up 97 points. It is trading out at 16,679. S&P up 13 points, trading at 1891. Composite up 50 right now. It's trading at 41.22. Hey, how about that weak link out here? Not so weak this morning. You've got the Russell 2000 leading the charts, the upside, up 1 8/10% right now, trading out 1126.57. Apple gapping up this morning. That was after gapping down on Friday. That means a little bit of a islandish type of bullish pattern that is out there. It's up $4.36. Microsoft up big, up 37 cents, up 1%. Google up 1%, up $5 and change. Priceline up 2%. Priceline's going to be trying to take on a descending channel line, a trend line. Let's go take a look at it, as a matter of fact. Let's just stop here for the moment. Let's go take a look at the price line. Momentum stock that has just really been crushed off of the highs from 1378 all the way down to lows on Thursday at a price point of 1087. You can see a little bit of a channel line out here. I'm only drawing the bottom of the channel at this stage here. You're using, in essence, the open of March the 7th. That's at a price point of $13.72 out here using the open of the trading session from April 24th. That's out at $12.32 out here. Looks like a Priceline is going to try to bump its head into that trend/channel line out here, right around the price level of $11.74. That's where we saw a little bit of a downdraft with 1.1 million shares. We have been trading for about 41 minutes, and it is up with 233,000 shares. So volume, not too bad for the first less than an hour of trading out here. In fact, it's better if it could keep up this pace. It's better than the downdraft session from May the 7th. So we're going to pay attention to Priceline. Can it break through its trend, or does that actually stop price? We've got CF Industries up about almost 3%, up $6.50. Amazon is up by $6, almost 2%. Athena Health up 4%. That stock had been hammered quite a bit out here. Wynn Resorts up 2%, up $4 to the downside. Core Laboratories, we'll go check in on that. Bad news out there. It's off 18%, down $34 this morning. I will assume with some volume behind that move. We'll take a look at that. You've got Insys Therapeutics, INSY, down 14%. Hillshire Brands off 6%. Concho Resources, CXO, off $2.43. Bridgepoint Education, BPI, used to be an accounting software package back in the late 70s, early 80s out there. BPI is off 12% here. Herbalife down 3%. Our call-in number is 877-927-6648. Give us a call, folks. Happy to field your question, answer anything I can about your stock chart. Let's go peek in on the indexes. Let's see what we've got going on out here. Let's look at the Rhodes Momentum Indicator strategy. Let's put up the charts here. Let's take a look at the daily chart as we speak right now. Let's take a look at the NASDAQ Composite. What do we have take place here? Candle-wise, on Friday, get a nice little bullish engulfing candle. Of course, that was easy to do because we had a little doji on May the 8th out there, very narrow-bodied candle out there. So forming a bullish engulfing, that was pretty easy to do. But gapping up this morning, nice strength inside of the NASDAQ Composite on the daily chart. Actually, it closed today above that doji candle from Thursday out here, puts you into a nice little buy mode out there on the daily chart. The high on Thursday was 41.0920. You're at 41.2318 out here. Let's take a look at the weekly chart. With the weekly chart for the composite show us here, not as pretty of a picture out here. In fact, last week, really no indication of any kind of bullish move out here. But today, or this week, really, because it's a weekly chart, above the 41.25 level. Really, the key number here to be watching, quite frankly, on the weekly chart is, sorry about that, is going to be the candle session high from April the 11th out there. And that high is 41.8519. So we're, 60 points away from that at the end of the week, just the beginning of the week. At the end of the week, close above that would be very bullish out there inside of the NASDAQ Composite. Actually, on a weekly chart would give you your next buy signal. But we're not there yet. We'll take things one day at a time. Let's go take a look at the Russell 2000. Let's go see what it is doing on Friday. It rejected low, formed a nice little piercing candle out here. Leading the charts, the upside up now 2%, up 21 points out here. So the the rubber band is snapping, and it is snapping the little turtle out there. If you were short the Russell 2000, I just hope that you had some stops or you have some stop in place out here, because it actually rejected the February 5th lows. It made a 100% move of a move out there. You're seeing a nice bounce here this morning, nice little rising window of confirmation to the candle signal that we saw on Friday. That's with the daily chart. The weekly chart, well, that's kind of more miserable than the daily chart out here. What does the weekly chart need to do in order to get really to full bullish mode? It needs to be a close above the high from April 11th, and that is at a price point of 1160.40. So at this stage, inside the Russell, inside of on the weekly chart, especially inside the Russell, inside of the NASDAQ, counter-trend rallies going on. However, they can be some fairly large snapbacks. And it is the NASDAQ and the Russell right now that are leading the charge to the upside. Let's go take a look at the Dow out here. Let's go see what it's doing. It is trading up 97 points right now. It is making new highs with less relative strength out there. That's never a good sign, but that is not a sign that says go short. Right now, what the Dow is trying to do is take out the high from April the 4th And that high is at 16,631.63. You are at 16,680. Yeah, I would say that it has taken it out. That was the shooting star. That should become a support. So that's the key level to be watching now. Old resistance. That was a reversal signal. That was a shooting star candle out here. That high, 16,631.63. That should become support. So that's important now for the Dow to stay above that level. But we do have a price relative strength divergent pattern that may, in fact, be forming. We won't know until we see some type of candle signal out here. If we take a look at the trannies out here, if we take a look at the transports, they're moving higher, also doing it with less relative strength as we speak, but it too is above its little shooting star. In fact, that shooting star candle also from the trading session of April 24th. Its level now of old resistance, 77.74.58. You're at 78.41. So 7774.58. That should become the new support level inside of the transportations out here. Let's take a look at the NDX 100. Not going to look a whole lot different than the NASDAQ composite. Well, here's the weekly chart. Oh, I was looking. That was weekly chart I had on the transports out there. So looking pretty good. The weekly chart here for the NDX 100, the key level here is going to be that high from April the 11th, and that is 3602, 3602.35. You're at 35.96 right now. So the weekly chart looking pretty decent. Let's go take a look at the daily chart out here. Let's put that back up on our screen. What does the daily chart need to do? Needs to get above, I'd have to say, this little resistance area, which is going to be the candle session from May 1st out here. A close above 3613.03 would be very bullish for the NDX 100 out there, and that is its next area of resistance. Let's take a look at the stocks. We haven't taken a look at the semiconductors out here. Let's go see what they're doing as we speak. Semiconductors trying to move above, where's a resistance? I'm just looking for a natural resistance. There we go. This little bear sash candle back here on April the 10th. And that high is 588.45. You're at 584.57. So a key level to be paying attention to, 588.45 out there for the semiconductor index. That is on the daily chart out here. Let's take a look at the S&P 500. I don't think we've done that. And if we have, my apologies. We're going to go ahead and do it again out here. Here's the daily chart for the S&P 500. Right now, it is trying to take on its swing point high here from April the 4th. And that price point is at 1897.28. We are just a few points away from that. A close above that, that would be very, very bullish out here. And I suspect that is what we are going to see. Now, for it to stop there, for it to test that, for it to pull back, as long as it's not any kind of reversal signal, because that is a 100% move of a move, that should be expected. But I do believe what the S&P 500 is going to do. It wants to move higher. It wants to go make a 1-to-1, at least A to B equals C to the upside. When we get back, we'll go take a look at that. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now we've got the Dow is up 99 points, 94 points, trading out at 16,675. S&P is up 14, trading out at 1892. Now let's go check in on the ETF structure for the ETF indices out here. And let's do it using a couple of different tools. Number one, if you're watching us on Tiger TV, you've got my eSignal charting application. eSignal's been my data feed forever. We're now taking a look at some of the charting tools that are available. Now, one of the charting tools that I have on here, one, I've built my own A to B equals CD tool, so we'll take a look at those price projections. I've also got the TAS signal box. If you haven't had a chance to check out the video that John Logan does for us here at TFNN each morning, do yourself a favor. It's out by 8 o'clock. Each morning. It'll give you a better feel for the indicators that you're taking a look at on my screen and chart out here. Now, I'll first put up the weekly chart. We'll go from weekly back to daily. The weekly chart out here shows the red horizontal lines you see on my screen. You're going to see red, light, well, you're going to see a number of lines on my screen, but it's primarily the red horizontal, the light blue, and the green area. Those are the areas that you want to be able to be paying attention to. The red area, they become what's referred to as the unfair high. That really becomes a resistance level. On a weekly chart, right, you've got the longer trend when the price is above that area. It's telling you really shouldn't be short out here. 187.49 is the number there. Right now you're at 189.37. We had to close above that the last 2-week trading sessions out here. That is the message from the weekly TAS market profile box out here. Let's take a look at the daily chart. The daily chart shows resistance, which price is above here this morning, 188.44. You're at 189.37. Now, here's where the small A to B equals CD to the upside could take us to. The A point on this, let me click on the tool out here. Our A point that I'm looking at is going to be the low down here from April the 11th. April 11th, our B point is going to be the high from April 24th, and our C point is going to be the low on April 28th. So you're at 181.31 is your A. Your B point is out at 188.39. Your C point on the 1-to-1 A to B equals CD is 184.96 out here. 184.96, that says your 1-to-1 A to B equals CD would take you up to the 192.04 area. I suspect more likely what we will see is a move to about 193.97 out there, and that will set up our butterfly pattern. At least I believe that it will. Let's take a look at that butterfly pattern. It's going to be easier for me to draw the butterfly pattern using my Ensign Windows chart out here. And let's take a look at that. It's coming off of the swing point. That's assuming that it can clear. This is key. April the 4th. That's a swing point. 189.70. That's the level that it needs to clear. If it gets above that, look, if it gets above it on light volume, all the more bearish because it could be setting up a tiger butterfly. And if it gets over that with volume out here, that sets up a. So your 1.272 butterfly is at the 1-to-1 A to B equals CD. That's what that looks like. Let's put this on the screen out here. That's at that 192.03 range. And I suspect at a minimum, that is where we are going to see price actually move up to. Could move up and form the 1.618 butterfly, and that's up at around the 193 area. But the key is going to be, and the volume's pretty decent at that April 4th high, right? So you got a high volume high out there. That's at 189.70. Right now you are priced at 189.41. The volume up there, 169 million shares. We're up there right now with 23 million shares. So volume is not really too bad here. We are only 1 hour into trading. Now, of course, if we were to multiply that times 6.5, which is not really a good thing to do, but if we were to maintain that same volume, you would be going against, 169 million versus 23, that's 120 million. So you can see, no matter what, it's going to be light volume today. It's not going to be able to take that out. Well, it does not appear it's going to be able to take that out with volume here today. And, well, I've got some nasty sound. I hope it's not coming through to you out there. I'll have to check that out in a minute and 20 seconds out here. So that's what's going on inside of the SPY. Let's go back and take a look at the market profiles using the, let's take a look at a weak link out here. Let's take a look at the IWM now. The IWM leading the charge here this morning to the upside. We're going to see that this is not necessarily in a buy zone or a buy mode out here. Give me a moment here to let this thing populate. Yeah, I've got a UPS that is making a nasty hum out here. Well, if we take a look at the weekly chart, here's what the weekly chart just set up a new market profile today. That says resistance on the weekly chart is at 115.95. Right now you're priced out at 112.41. On the weekly chart, it is no longer inside a sell mode out here. Let's take a look at the daily chart, see what it is doing. The daily chart found support here on Friday down at that unfair low at 108.76. Its next key area of resistance, 113.12. If we can get above that, that has its sight set at the 115 mark out here. Right now, we've got the Dow is up 94, S&P is up 14. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released.
The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 91 points right now. Price on the move up $29. Netflix just behind it. Well, it's up 3%, up $11 out here. Biogen, BIIB up $9 and change. Regeneron Pharmaceuticals up $8. Google up $9. Amazon up $7. So we're seeing a nice little bounce back here in the market. So we're taking a look at the SPY. Let's take a look at the IWM, actually. We mentioned the IWM. It's got some resistance here at this descending price channel line. That's really what we want to watch, which would make sense here for it to come back and at least test the swing point from April 22nd. That's where it is headed to. You've also got this downdraft session from April the 4th. So watch the low of 114.02. See how price handles that area. It should be an area of resistance. The 114.02 to the 115.02 mark, that dollar range. And I suspect as price gets back there, it'll start bumping its head against that descending trend line out there, channel line inside the IWM. Inside of the Qs, what are the Qs here trying to do? Well, the Qs also have a nice little bounce this morning. They're trying to take out a B point. That's going to be the swing from April 24th out there. That high is 88.21. You're at 87.88 right now. Volume is 48 million shares on that trading session out here. So far, it's done 11 million shares, which is pretty nice volume for 1 hour of trading out there. If it gets above that, what we will see the Qs do here, we'll see the Qs try to get back inside of this trend line that it broke. This is a trend line, short-term trend line, takes us back to a year ago, back to June of 2013. Broke through that trend line, has not bounced back up here to really test it. And I suspect that's really what it wants to do. Get up into the $90 area. That's about $3, $2.10 or so. higher from where it is trading right now. 90.07 would be your 1-to-1 A to B equals CD, and it looks to me like that is what the Qs would like to do. Remember, the Qs here, they have this very unique characteristic of making lows with high volume, and that is, again, what we saw. We saw our third higher low with volume, and that last one was on May the 7th out there. May 7th, that low is going to be very important for the Qs to hold. That's at 85.53 out there. If those lows get taken out, that analysis to $90 will have to be taken off the board. But right now, that is what the Qs want to do. The diamonds are trying to make their own butterfly pattern out here. And the 1.272, that doesn't mean that's where it has to stop. But 167.84 is your 1.272 butterfly pattern out here. If it gets up there and then fails and we see some kind of volume failure or something, then we'll have to take a look at, is the April 4th level, does that become old resistance, become a new support range, which is 166.06. But your 166.68, the volume on that trading session was 10 million shares. So far, the diamonds this morning, 1.5 million shares. So they really got to get some giddy up and go in volume in order to be able to take that out. That 1.272 butterfly at this stage here looks like that will be a tiger butterfly. However, does not have to stop there. It can easily make a run. Well, it can do whatever it wants to do, but it can easily make a run to the next level. Next level would be the 1.618 expansion. And that area takes you to 169.88. Now, another B point out here that is worth noting of an A to B equals CD pattern, that is, well, at this stage, we're not going to pay attention because we had a little bit lower low back here on April the 11th. So, it'd just be a larger A to B equals CD that I'd be taking a look at, and that would look like this. That would be coming off of the low from February 5th all the way to this April 7th high, down to the low that was put on in April the, April the 11th out there. That 1-to-1 would take you up to 179.92. But we'll just take this one step at a time. The reason why that is even a possibility, folks, is because if we go back and we take a look at the consolidation pattern, by the way, here's the Russell 2000, and you can see the Russell 2000 pretty strong, huh? It's actually broken. Right now today, the trading session's not over, so we have to see how the trading session ends. But right now today, it's breaking a descending price channel line that was in place. So that's pretty important to watch what happens inside of the weak link out here, inside the Russell 2000, because the Russell and the Qs start leading, then you can expect these SPYs and the diamonds to just continue their move substantially higher. And inside the Dow, we can see here is there's a 450 point, I believe it's 450. Let's see. I thought I had marked this in. 15,911 up to a high of 16,508. So, it's more like a 600-point move, right? About a 600-point move inside of the Dow. So the measured move for the Dow futures says 17,000, 17,100, something like that. 17,042 would be your 1 to 1.2 A to B equals C to the upside. So the Dow has broken through its consolidation zone out here. Of course, the S&P has really done the same thing. If we take a look at the S&P futures contract out here, it has a 112-point consolidation. Price broke out of this. It broke out with conviction back in March 2014. Price came back into it, and all that it really did was it tested the bottom of its rising price channel. That's coming off the lows here from November of 2012. So price came back, tested that level. Now what it's trying to do is take out this key reversal session. There's really two of them. There's one that formed on April the 4th. There was another that formed here on April 24th. If, in fact, the SPY can close above 1892.50 out here, 1892.50, that sets up it sets up a move to 1957. That's your consolidation move out there. And, of course, the A to B equals CD probably gets us to a similar price projection. Your 1-to-1 A to B equals CD price projection inside of the ES Mini takes you to 1963. Yeah, so you got an A to B equals CD pattern in 1963. 1957 is your consolidation move out here. Now, if, in fact, the ES Mini, which has got volume of 1.2 million contracts on April 4th, if it can close above that with 1.2 million contracts today, that would be extremely, extremely bullish out here. And price would move up to the top of that rising price channel out here. So we've got two patterns, the S&P, the ES Mini, the Dow futures, we've got both of them breaking through long-term consolidation patterns out there, and that is not bearish, folks. That is bullish out there for those two. And what they need is they need participation. They need a little help from their friends, just like I do from time to time, actually all the time. Their friends, however, are going to be the Russell 2000 and the NASDAQ futures. Well, inside of the NASDAQ, a little help from their friends are its descending price channel out here. Right now, today, we're seeing a break of that area. In order for the NASDAQ to really get a moving and a grooving, it needs to get past this key reversal area, which is April 24th high, 36.1825. You were at 35.96. Maybe we'll see a test and a break above that here today, for all I know. Of course, we are seeing a nice break of the descending price channel inside of the Russell 2000. And so the friends are really helping out here. So it is not just now the Dow and the S&P pulling everything higher. You now have some participation breaking downtrends channels inside of the 2-week links out there. On the first show, we took a look at, well, let me show. Actually, I was looking at gold. We haven't looked at gold here this morning. But if we take a look at the 120-minute chart here for the Russell 2000, still was making lower lows, doing it on what? On less relative weakness out here, a price relative strength divergent pattern, little piercing candle that took place at 10 o'clock in the morning. That was on Friday. We now have some nice momentum to the upside inside the Russell. Speaking of gold, let me just pull back here. We'll take a look at Goldilocks. It produced this similar pattern here this morning, or last night, I should say, at about 10 o'clock. There we go. So you define the symbol out here. So it had formed a nice price relative strength divergent pattern on the 120-minute time frame. It is trying to break out. We'll take a look at its resistance levels. Is it important, these patterns out here, these price relative strength divergent patterns? Well, if you take a look at back here at about 10 o'clock on April the 24th out here, that set up a nice little bounce inside of gold after forming one of those patterns as well. Of course, it has formed highs out here, significant highs. So, yeah, I'd have to say that this pattern, this Rhodes momentum indicator signal, that it is important to be paying attention to. Right now, though, we've got gold. It's trading out at a price level of $12.99. That is up about $11 out here. Silver, the big mover, up 47 cents right now. So if we take a look at the, let's do this. Let's well, that's a delay on that feed. Let's come over and we'll take a look at this here. Let's go take a look at gold and silver. Let me switch to a different tab. Where is that tab? Well, I'm just going to have to switch back to this one because I know where it is. Sometimes it's right in front of me. So in the case of gold, what we need now, silver. In the case of gold, let's stick with gold here. What we need to see to get really bullish inside gold is a close above the 200-day exponential moving average. That price point is at $1321.90. So far, we haven't come close to that today. We've only gotten up to $1304. Nonetheless, gold is putting in a nice little bottoming pattern. Now, that was on the 120-minute chart. The daily chart's putting in a pretty nice bottoming pattern. What do I mean by that? If you take a look at the April 1st swing point low, 1277.40, nice bull sash, bullish engulfing candle, April 2nd. Price comes back down here on April 22nd. On the 2 trading sessions later, you get a nice morning star, another bullish reversal signal. Price comes back to test that area on May 2nd. What do you get? Nice bullish engulfing candle on May 1st is when it tested that area. May 2nd also was a test, but turns out to be a bullish engulfing candle. This morning, really the same kind of setup out here. Now, I know I've shown you this pattern in before. Here you've got these 2 little dojis, the last 2 trading sessions here for gold. If I go switch back over, let me do this here. And this is called, in essence, a 4-river Morningstar candle out here. Let's put the Dow up here on my chart. I found the multiple session Morningstar patterns tend to be more meaningful than the ones that occur up at the highs out there. And if we take a look at this, here's a 3-river right here. This is during the trading session of October 8th, October 9th, October 10th. 3, just meaning it took 3 trading sessions, in essence, to complete that pattern. Here's a, this is a weak one. But if we go back, we take a look at right back here inside the Dow. This is November in 2012 when it was making a bottom. Very similar pattern to what we just looked at on the daily chart here for gold. If we take, here's another pattern back in the lows in June of 2012. Here's one of those patterns. Now, today's pattern is not completed yet. Notice here that as you take a look at the real strength behind the move, see how the that 4th session fourth or fifth session, whichever that wide-ranging bar totally takes out the descending bar here from June 1st. See that if you're watching this on Tiger TV? That's where you really can measure the power behind a move. Here's another one. Here's your Three River Morningstar. This is back at the lows in November of 2011. That was right coming back from Thanksgiving out there. How helpful would it have been to being able to identify that candle pattern inside of the marketplace? I'd have to say very important. And then if we go back all the way to the March 2009 level, actually here's July in 2009, market made their first retracement. They made their first retracement. They came down. They formed what? They formed that little Three River Morningstar. Of course, this was over 5 candle sessions out here. Here's the big one. Here's the big kahuna as lows were made back in March of 2009. So how important is that candlestick pattern? You don't find many failures at lows when that candle pattern is formed. Maybe it's just simply because fear is a greater emotion than greed is out there. When you see that, that really is a nice capitulation move out here. So now let's go back and take a look at gold. What does gold need to do in order to make that same pattern here today? Well, gold needs to close above the body of this session right here, which is May 7th. And that open was at 1307.90. You're at 12.99. It should be no effort at all if gold really has some legs here. Now, that doesn't mean if it doesn't happen that there can't be a bottom. But if we do see that pattern here, I just showed you a pattern that at least inside the indexes, inside the Dow itself specifically, has formed real nice bottoming, at least with regard to the message of the bulls and the bears. And that's really what we're supposed to do, is go read those candlesticks to help us understand what is going on inside of the marketplace. So today, inside of Goldilocks, the key number is going to be 1307.90. You get a close above that, then it should be able to easily take out that 200-day exponential moving average and try to get back into its friend, which is the trend, which is that rising price channel, which it broke out of here, broke out on the trading session of March 26th, went back and tested it on April 14th, rejected that area, wants to try to get back into that club one more time. So that's what's going on inside of Goldilocks, and that is what we want to be paying attention to there. If we look at silver out here, silver much stronger than gold. Silver doesn't have that same pattern that we just looked at. So in the case of silver, what's bullish or what needs to be bullish or what would be bullish today would be a close above the June 28, 2013 high, which is $19.63. Right now, silver is trading out at $19.60. So very important 3 pennies out there for silver to close out its session. You'd like to see it do more than just 3 pennies. Let's look at light sweet crude here. Let's go see what's going on in the crude oil complex. You got crude up 89 cents. It's trying to get up to its friend, the trend, the rising price channel. Has not been able to do that. Today would need to get into about probably the 101.52 just to bump its head into the bottom of that rising price channel, which it broke out of on April the 30th. Right now, light sweet crude still looks more bearish than bullish to me out here. We'll see what happens as price gets into that rising price channel. Right now, Dow's up 101, S&P is up 15, Russell 2000 leading the charge up 2.25%, up 25 points right now. Nice move on the net advancing issues. NYSE 1853. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 86, S&P is up 13. So let's check in, see what we should expect here for the next couple of hours or so. We're going to take a look at if we looked at the 120-minute charts for the four indexes out here, the futures contracts, what we'll see is that the price has moved up into the overbought condition. So how that gets worked off is really going to be key here. Now, in the case of the ES Mini, the swing point high that it's contending with is from the 10 o'clock time frame on May the 2nd. The high out there is 1886. You're trading at 1887 right now. Volume out there on that trading session was 492,000 contracts. Unfortunately, as price took that level over here this morning, 267,000 contracts. So not a confirmed A to B equals CD to the upside. That doesn't mean that it won't eventually get there, or that it'll get above that level and stay above it on light volume. It can most certainly do that. But what we can see here, if you're looking at the bottom of my screen, you're looking at the 14-period relative strength indicator out here. Every time price gets up into that oversold, overbought, well, in this case here, overbought condition, down to an oversold condition, it needs to work that condition off. And that means moving sideways is bullish, pulling back to a 0.618 area is okay. Anything beyond that is a little bit more dangerous out here. We also see a rising trend line and a rising price channel that the ES Mini had been traveling in. You can see the last time up here to try to get back into its trend was back at around noon on May 8th. That level was rejected. At this stage here, it's trying to make a higher high, doing it with more relative strength. That is more bullish than bearish, but it doesn't really have the volume behind the move out here. maybe we're starting to come into summertime, maybe with it being Mother's Day. Some folks are taking some time off in the markets. Nonetheless, what it does look like to me is that the ES Mini eventually wants to make a move up to that 1896 level. That's your 1-to-1 A to B equals C to you're at 1887. So not a whole lot of, it can easily make that move out here. That's what's going on inside of the S&P futures. If we look at the NASDAQ, and that's on a 120-minute time frame. If we look at the Dow, same type of setup out here. You can see it's gotten into an overbought condition, so it needs to work that condition off. So far, we had, 28,000 contracts taking out a potential B point that had 30,000. So volume there not too bad. That's most recently at 2 o'clock in the afternoon on May the 8th out here. Nonetheless, a move sideways, slight pullback in the market. That's not a sell signal. Remember, this is just getting into an overbought condition inside its more intraday time frames out here. Same thing inside of the NASDAQ. As we pull this up, you can see it's in the overbought condition out here. It's right now taking on a resistance level. Really, the key area for the NASDAQ on the 120-minute time frame is going to be the candle session from 10 o'clock in the morning on April 24th. We saw 120,000 contracts there. A little key reversal session as well. That price level is at 36.1825. 36.05 area is proving to be the resistance area up here most recently with a volume of only 67,000 contracts. So volume is absolutely light here today on all accounts. Even at 12 noon on May 1st, there were 72,000 contracts out there. Nonetheless, we've got the VIX index trading below the 50-day exponential moving average. We know that's when markets move sideways or move higher. The 50-day exponential moving average is priced at 1407. This is at 1241 right now. What does that mean? That means lots of liquidity. So if you've ever asked yourself, how does a market go up on light volume? Well, just flush the market with cash. And that's what the VIX index being below the 50-day tells us. That's what the euro-yen currency pair tells us as well. Right now, you got net advancing issues, 1,749. In order for the NYSE to get full-blown bullish out here, all it needs is 751 or more net advancing issues. Folks, that's the end of our day. Well, the end of my morning with you. Thanks so much for joining me. Stay tuned. Our man Basil Chapman is up next. Have a great Monday. Look forward to seeing you bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.